Strap in. We're talking infinite banking. Infinite banking is when you use cash value life insurance as your own bank.
Infinite banking is the newest gimmick that the cash value industry is beginning to use to make cash value sound appealing and available and good for people. And this is the way they basically take advantage and scam people. Cash value life insurance is the worst type of life insurance anybody could buy. And we'll explain it. Well, let's break down this video.
Here's our example. We start off with a whole life insurance policy of $500K.
By the way, whole life insurance has simple rules. Number one, in the first 5 years, and in some like really bad policies, in the first 20 years, there's a thing called a surrender charge, which means that there's no savings built inside. If you cancel your policy, you lose your savings in the first 3 to 5 years. The second rule is that after 5 years, let's say the savings does grow and you need to take money out, you can, but you're going to have to pay 4 to 8% interest in a loan interest to borrow your own money. They lend you your own money. And last rule is that if you die, guess what happens to your cash value? You lose it. You're paying for two things, but you only get one.
We take out a loan from that policy of $35K. This loan's taken out with no penalties, no fees, and tax-free.
Now look, in order for you to take a $35,000 loan, that means there has to be $35,000 in cash value available. You don't take out $35,000 from the $500,000. Okay, the $500,000 is a death benefit that goes to the beneficiaries if you die. That's not available cash value. So that means that in this example, in order for there to be $35,000 available to take out on a loan, you would have had to start the policy with a deposit of over $35,000 to start the policy, a down payment of $35,000. Who has that type of money? And by the way, if you take out a loan, yes, you don't pay fees or penalties, but you're going to have to borrow the money from the insurance company. And basically, the insurance company is lending you your own money at an interest of 4 to 8% return. So you don't pay fees, but you pay an interest to the insurance company to borrow your own money.
We take that $35K and we buy an SUV in cash. Instead of paying back a bank, we make payments back into our policy.
Well, if you have the money in cash, why would you want to put it inside of insurance company? Just buy the SUV in cash. If you don't have money, you borrow it. But if you have it in cash, which in this case you have to had it in cash in order for you to start a life insurance policy with $35,000, why let the insurance company lend it to you when you could just buy the car in cash?
We're making these payments back to ourselves into our policy. And since this is a loan, whatever our cash value is, it is still making interest.
Well, it's making interest, but you're losing interest when the insurance company lends the money to you. And by the way, if you borrow $35,000 from your own cash value, and if you die at that point, guess what happens to your $500,000 death benefit? It goes down $35,000. So you're paying for two things, the insurance and the cash value, but you only get one.
While we have this loan taken out. And who are we paying back? We're paying back ourselves.
That's not true. You're paying back the insurance company because he lends you your own money.
You are your own bank.
The insurance company controls your money. The insurance company does not give you ways to be your own bank.
You are your own line of credit. And you will never run out of money.
That's a straight up lie. You will run out of money because if there's no cash value available for you to take out, guess what? You run out of money. So what is the solution? What you do is you buy term insurance and invest the difference, the cash value, in a separate account like a Roth IRA, and let your money grow in mutual funds long range. And this concept beats a whole life policy 100% of the time in terms of benefit to you. This lady right here is trying to sell you a whole life policy where she makes 3 times more commission than selling you the right thing, which is a term insurance and mutual fund. Insurance company likes to teach people like this lady to sell whole life because insurance companies make 10 times more profits, revenues, selling whole life policies versus term life insurance, which is the best thing for you. Be careful, guys. Be careful with how they're twisting it and how they're selling you cash value policies.
Strap in. We're talking infinite banking.